CareSmarts 360 on Air, a home care podcast. I'm Erin Powell, account executive at CareSmarts 360. In the lineup of expert speakers at the 2024 Pennsylvania Home Care Association Conference, today we have Emina Poricanin, a prominent home care attorney on the pen. Emina has been an attorney for 15 years, representing the management of employment issues, particularly in wage and hour class action, litigation, and DOL audits. During the conference, she solved queries and gave additional information about wages and work hours. Emina also explained various terminologies regarding employment types in home care. Welcome to CareSmarts 360 on Air.
Thanks so much for having me.
Of course. So let's jump right into it. What are the basic rules for minimum wage and overtime?
Sure. And I'm amazed at how many times I still have to recite these on a weekly basis because they're the foundation of everything that we talk about in wage and hour law. So unless the employee is considered exempt, and we'll talk a little bit about that in a few minutes, but unless the employee is exempt, they have to receive at least minimum wage and overtime for all hours worked that are overtime hours. Now, minimum wage is set by federal law, but to the extent the state law sets a higher minimum wage, the state minimum wage rate will govern. And so that will be the rate that the employer will have to pay. For all hours worked over 40, the employer has to pay overtime, again, to those non-exempt employees. Now, a lot of confusion comes into play about how to calculate overtime. Many payroll systems are not designed to correctly do that. And so in addition to being a wage and hour lawyer for almost 2 decades, I have a payroll, HR, and tax software that actually has put the knowledge and experience of employment lawyers into the software to automate that compliance and the calculations. But the short end of it is for any overtime hours, the overtime has to be paid. And the overtime, when there are multiple rates of pay to the employee, have to be averaged out, or there's an alternative method to come up with that overtime rate. A lot of math, and I think that's why people get tripped up.
That makes sense. What counts as work time and how to track and record it properly and pay accordingly?
So there are so many ways to track it. The law doesn't require employers to use any particular method of tracking, but as long as there is some tracking. And again, here we're talking about non-exempt employees, those individuals who are eligible for overtime. And so it's really important that at the end of the week, the employer gathers up all of those hours in order to be sure if the employee crossed into overtime. And if the employee did, then they get paid the overtime rate, which is time and a half, the regular rate. Now, what's considered hours worked is very, very arguable and debatable within the home care industry. Although someone like myself, who's a home care attorney and a wage and hour attorney, the rules are actually pretty clear. If the employee is performing labor at the direction or in the benefit of their employer, the Department of Labor will consider that to be hours worked. Where the confusion really arises has to do with people who work off the clock, meaning they come in a little bit earlier. They may even punch in earlier, or they stay late and they punch out late. Those additional minutes tend to add up and may even bring the worker into overtime hours. But because in home care, the reimbursement is so tight, the employer will often shave those extra minutes off of the compensable hours. And so the employee will be paid just for the authorized hours of work and not for those additional minutes that they clocked or not have clocked. And so when we talk about what's hours of work, it's really important to just capture every minute of every labor, because the Department of Labor and class action plaintiffs often take the position that they have performed more work than what was captured on the timesheets and that they were underpaid because they were not paid for all those hours.
Mm-hmm. And you touched on this, of course, in this answer, because the next question was how to calculate overtime and what are the exemptions around overtime?
Sure. So let's get into that a little bit. To calculate overtime, the math is actually really simple. And if you have one rate of pay in a week, the math is going to be rate of pay times 1.5, and that gives you what you have to pay as the rate for hours 41 and above. The computation is slightly different and complicated if the employee works at different rates of pay in a single week, and or they receive additional compensation on some regularity that in the eyes of the law, it does become part of the regular rate. So for example, there are certain laws that will require the employer to provide benefits, but employers, in order to incentivize home health aides to work, instead of providing a benefit, they will pay cash in lieu of the benefit. The Department of Labor takes the position that that additional cash, it needs to be part of the regular rate. And so, for example, if the employee's regular rate is usually $15 per hour and they are entitled to $2 in benefits, but the employer is paying $2 in cash instead, the USDOL, for example, will take the position that the employee's overtime rate should have been calculated on the basis of $17 per hour, not 15. So these are the type of nuances that we try to capture at my payroll company and make sure that employers are aware to ensure that they're doing the calculations correctly.
Sure. And within that, who classifies as an independent?
So this is another area that really the regulators focus on extensively. Who is an employee and who's a consultant? Who's a contractor? Who's a 1099? So 1099s get to, and Erin, let me start that a little bit backwards. Sure, this is also another area that is actually pretty heavily litigated and audited. The question of who's an employee versus the opposite of employee, which is a contractor, or sometimes known as a gig worker or a 1099 or a consultant. Now, a 1099 is really a vendor. They are a vendor to your business. They're providing a finite service. They're providing a project basis service, and then they're gone. A W-2 employee is someone who is there in the business with some regularity and consistency and is paid regular wages, is eligible for overtime, receives unemployment insurance and workers' compensation coverage, and most importantly, maybe most expensively, the employer is required to pay income taxes on their wages. Whereas a 1099 or a contractor, they get the flat rate or total sum of all of the hourly rates for their work with no deductions whatsoever. And at the end of the year, they're able to deduct their expenses and then pay self-employment taxes on that reduced income. So there's a lot of tax advantages, frankly, to being a 1099 or a contractor. And so a lot of individuals want to be classified as contractors, but the law takes a very shrewd approach. If it looks like a duck, it's going to be a duck. So if it looks like a contractor and not an employee, the Department of Labor, the IRS, the Workers' Compensation Board, all of these regulators that want the employer's money will take the position that the worker is or should have been classified as an employee. Now, people often ask me, well, how do I determine if someone is a contractor or an employee? And I always say it depends on what law we're looking at. If we're looking at deciding this question for purposes of overtime, then the economic realities test really will govern, which means in very simple terms that the regulators will look to see if that worker is dependent on the business for their income, or if they're truly in business for themselves, if they're serving other clients, if they have a book of business of their own, and they're not working full time for this entity that has been paying them on a 1099 basis, then the Department of Labor is likely to find that this is a bona fide contractor. But if they're working full time, if they're eligible for benefits, if they are working in the office of the employer, they're coming in regularly, they're subject to the policies and procedures of the employer. If they look and act like every other employee, then the Department of Labor will find them to be an employee.
Makes sense. And finally, what is the meaning of joint employment?
So joint employment, again, has different meanings depending on what law we're looking at, but we're talking about employment law here. And in the context of, again, who receives overtime or not. Two unrelated entities, so two EINs, could be deemed to be a joint employer for purposes of overtime, so that if one employee works 30 hours for one business and 30 hours for the other, there is a total of 60 hours for the week, And those two companies, again, even though from a corporate standpoint are completely separate and distinct, jointly owe that employee 20 hours of overtime for that week because the hours will be deemed to be aggregated. The two companies, even though separate, if they have some sort of a relationship, if the ownership is common, if the operations are commonly shared, if they are financially shared, right? If there's the same administration for the two businesses, even though they are, from a corporate standpoint, separate and distinct and may file their own taxes, for wage and hour purposes, they will be deemed to be one entity, which means all of the hours worked by one employee across the two businesses will need to be aggregated for purposes of overtime.
Well, thank you, Emina, for sharing these great insights. I'm sure the audience got in-depth knowledge about the meaning and classification of wages and work hours in healthcare and various employment types. And to you, my wonderful audience, thanks for tuning in. Until the next episode, this is Erin Cow.